Hey everyone, today, the one, the only, Lawrence Lepard. We are talking about what has to be one of the most pressing challenges our generation and younger will be forced to face at some stage. Why does our financial system force us to work harder and harder and harder for a life that our parents seem to enjoy with ease? Why can't we save our purchasing power without placing our money at risk? Questions like these are grabbing the attention of a growing population. Now, with decentralized information sharing from a new form of media that you and I control, the world's starting to wake up to the truth about inflation, government spending, and the real reasons behind why markets rise over time. Larry has over 41 years in the investment world. He's an advocate for sound money systems, and he recently released this book, The Big Print. It is a super easy to read book that you can share with all your normie friends after you've read it. Now, if you're new to this podcast and you enjoy learning about new and old ways to invest and build wealth for the new world that we're heading into, make sure that you've subscribed and that you hit the like button on the way through. Let's make a start. So, Lawrence, first question. You are one of a few people, very few people that I know of who understand gold as analog sound money and Bitcoin as digital sound money. Start with gold, though. So tell me what happened. How do you reconcile those two headspaces?
And as you know, there's some tribalism in each camp. There's some Bitcoiners hate gold and gold hate Bitcoin. So, well, it grew out of the history. Before 2008, obviously, if you were a sound money advocate, gold was your only choice. So it wasn't like I was not, turning down Bitcoin. It just, there are those of us who thought that the monetary system's been broken for a long time, really since 1971. Actually before that, but got much worse in 71. And so I was a gold advocate throughout all that time frame. And then, of course, Bitcoin emerged. And, as I've grown more and more comfortable with it, studied it more, etc., I've come to realize it really is digital gold. And it's got so many properties that make it better than gold. And its price performance is going to be much better than gold because gold pretty fully adopted it. It's been around for a long time. Everyone who owns it, wanted to own it, already owns it. Whereas Bitcoin is still kind of an emerging thing, as you know. The thing I try to do is I try to bridge both of those worlds and orange pill gold bugs, basically saying, I'm not necessarily saying get rid of all your gold. I'm not saying gold is bad because it will go up with monetary debasement occurring, but Bitcoin's going to crush it and it's going to go up much faster. And someday Bitcoin will demonetize gold, not in a year or 2 years like Bitcoiners think, but over a period of several years. It's going to, gold is going to become less relevant and less important, and Bitcoin's going to become more relevant and more important. So I've encountered all the standard concerns, that gold guys have about Bitcoin. And, probably I'd say the biggest one, the book I wrote tried to address this a lot, is that too many people conflate, crypto, which has a lot of bad actors and a lot of, non-proof of work, shit coins, with with Bitcoin. They don't realize that Bitcoin's a different beast, that it's a technological innovation. It's based on proof of work, that there is no one owning it and controlling it, that the monetary policy is set, and all these other things that make it so much superior to all these other cryptos. But I get it. I mean, gold people tend to be pretty conservative people, and when they see guys like Sam Bankman-Fried committing massive fraud, and they see a lot of other other non-Bitcoin things, other cryptos doing similar things like Terra Luna, etc., they tend to, sometimes just throw Bitcoin in the wrong bucket.
Yeah.
So, and I'm trying to straighten out that misunderstanding.
Yeah. What's the biggest blinder that, say, a gold bug, a gold maximalist would have when they're approaching Bitcoin?
It's a great question. I mean, some people are hung up on the physicality, right? That if you can't touch it, it's not really money. And that, these commodity monies became money for a reason because you can touch them, feel them. Ownership is 9/10 of the law, and there's no counterparty risk. And I get all of that, but if you really kind of look at even from the time, as Lynn points out, when the telegraph was invented onward, money's really become kind of a ledger. And even before gold existed, money was a ledger. There are cave drawings that show people marking things on walls, keeping track and keeping score. In units of just I owe you something, you owe me something, and so. As you know, your bank doesn't have all the money they say they have. They just have a digital entry for your account. And so, if you conceive of money as a ledger and it doesn't have to be physical, then you can understand Bitcoin. Some people are hung up in that physicality. I know, for example, Peter Schiff, who a good Austrian economist and a sound money advocate. It just you can't seem to get past that. Although recently maybe he's been softening a bit on it. But
That's right. Yeah.
The digital ledger piece is a part of it, a big part of it. And then I would say the other, I've got some people who just say, well, you can't beat 5,000 years of history. You've got 15 years. And, to my response to that is, well, yeah, okay. But, it's like saying airplanes don't work. I mean, and in the early days, by the way, airplanes were pretty risky and crashed a lot. But once they started working, you didn't have to have 500 years of airplane history to prove that airplanes worked, and so, this thing's worked for 16 years, with obviously some bumps but relatively flawlessly. And we went through some teething pains with, the blockchain wars and then the hard forks. But it seems to me now that we're really into a very mature monetary system, that's carrying $2 trillion of value and is supported by governments and so on and so forth. So I think we're beyond it's a toy, it's magic internet money stage. But some gold people don't see it that way. They're just very traditional. And I get that. And I think a lot of some gold people are very turned off by kind of the promotion and the excitement and the land rush nature of it, which I understand that too. But, I think once more often than not, in gold people that I've dealt with, once they do the work, they really get down the rabbit hole of ways, and they get convinced that it truly is immutable, and they know it's scarce because of the mathematical protocol. Then really the only remaining thing is, are people adopting it? And, if people were not adopting Bitcoin, if it wasn't getting used, if it was a big yawn, as I like to say, the dogs weren't eating the food, well, okay, then, maybe it's not money. I mean, Menger said money is the thing that we all agree upon is the most liquid good. And as it turns out, a lot of people are agreeing that this is a superior savings technology vis-a-vis other forms of money, certainly vis-a-vis fiat, which they're printing on a regular basis. And more recently, vis-a-vis gold. I mean, it's outperformed gold pretty massively. So it's coming along, and I think, sooner or later, everybody's going to have to accept that it is digital gold. And you see some big, and you see people change their mind, right? Like Saylor in 2013 said he didn't believe in it. Well, he changed that. He did the work. He read the Bitcoin Standard. He came to understand it, and he changed his mind. I mean, Larry Fink is a big fiat master. I mean, he's one of the largest money management firm in the world, BlackRock. Obviously did the work, looked at it, thought it through, and said, you know what, this is going to work. I got to decide if I want to make money off this and be a part of it, or if I want to poo-poo it, walk away from it, and, get fired the way the guy who ran Vanguard got fired. So, it's, I mean, as long as more and more people are adopting it, I don't really have much worry that ultimately all people are going to adopt it. I mean, every year we see the number of addresses growing, the hash rate growing, the price per unit growing, et cetera. Well, not every year because we have down years, but in general, the trend is very much in our favor. And when somebody says it's going to crash, I'm going to say, based on what? What indication is there of that happening? Because the trend has been very solid for 16 years.
Yeah. And I guess I probably should answer, or I probably should ask the other side of the question as well. Like because you operate, correct me if I'm wrong, but you still operate a gold fund, right?
I do. Yeah. I've got a legacy gold stock fund, which I'm indebted to get all the people who are in that out at a good profit. We're down off our high water mark, and I think it's going to perform pretty well because those stocks are very cheap. But, I'm not going to manage that forever. And over time, I will migrate to exclusively Bitcoin. But I emphasize over time. I think gold's got, a number of good years in front of it. And particularly, actually, if we do get into kind of what I would call a historical, sovereign debt crisis, a monetary crisis, I think there's some possibility that the countries of the world, the larger countries of the world, in attempting a reset, would attempt it with gold first, which is, the wrong thing to do. But I understand why they might do it. I mean, the market's bigger, it's better understood, et cetera. It's historically been money. So, and if that happens, I mean, the gold price is just silly cheap, even at 3,000 an ounce. I mean, the math is in the book. It shows the math is that if we were to cover it the way we covered, if the gold in the U.S. case, if we have the 261.5 million ounces we say we have, which it's unclear whether we have those, but let's just say, for the sake of argument, assume we have those. And you divide the monetary base by that number, I mean, you'd have to have a gold price of $80,000 an ounce. It's a long way away from 3,000. So, they can both perform well. I think they will, because I think monetary debasement is mathematically assured. But I think Bitcoin will perform better, I guess, is because of the adoption curve that's taking place.
Yeah, I guess it's easy, right, to look at how the future might unfold and say that people will reach for the most logical conclusion, but in some cases they might reach for what they already knew under pressure, right? So
Correct.
do you think
Right.
there's a case then for Bitcoiners considering gold as well, like going the other way?
Oh, absolutely. I mean, I don't think it hurts. I mean, my good friend Greg Foss said Bitcoin's a CDS. I mean, gold's a CDS on Bitcoin, right?
Yeah, there you go.
Bitcoin fails, gold's going to do extraordinarily well. I don't think Bitcoin's going to fail. But yeah, just in terms of having your money in lots of buckets, I mean, the gold buckets, what you get is you get much less performance, alpha and upside, but you also get less volatility. I mean, as we know, Bitcoin's had a bunch of drawdowns. Many of them are pretty large. I mean, and that's the one risk for a new Bitcoiner is that they buy it and it goes down a lot and they panic and they sell it, which is the wrong thing to do. I mean, the biggest gold drawdown ever, I think, was right after the 1980 kind of gold bubble burst, and it went down 30% in 1 year. In general, gold goes up every year. It's up 66% of the years historically since I think 1900, and maybe the 1/3 one is down. It's not down very much. So, I mean, one of the things I've got older clients, and so, one of the things the older clients don't like, they don't want to lose money. They don't want to have drawdowns. They're not worried. They have a lot of money, so they're not worried about how much money they make. They just don't want to see the numbers go down a lot. And so, in that particular case, I mean, buying an asset like Bitcoin that could go down 50%, or it has gone down 70% in the past. Although I think that's gone. I don't think we'll have any more like that. We could have 50% drawdowns. I mean, could we go to 200 and then pull back to 100 easily? If you're very rich and you have a lot of money, you don't necessarily want to buy an asset that can go down 50%. You'd rather buy something that just kind of marks up slowly, and the drawdowns are much smaller, and gold kind of fits into that category.
Cool. Now, I guess it's like a wave crashing on the shores, right? Or it feels like it's slow when you're on the inside, but it's probably quite fast if you're an innocent bystander watching this all happen. But you wrote this book, The Big Print. I got it late last week. I've been reading it nonstop. Halfway through, I'm just to the part where you're talking about the solution. So I'm quite pleased to note that this little post-it note here, which marks the halfway point, is exactly 50% of the way through, I think. So you talk about
It is, yeah.
the solution half the amount of time. It's quite cool. Is that by design?
Yeah, it was kind of by design. I mean, I wanted to, the first part is kind of scary and negative. I mean, it's, there's, we're in kind of a monetary quandary here. And, to say that things are just going to be all punchy, happy in the next couple of years, I don't think that's very realistic. I think we're going to have some monetary turmoil, but that's the bad news. The good news is that we're going in the right direction, and there's a really great solution in Bitcoin. And really, there are great solutions in all areas. I mean, I talk in there about, you'll get into the second half of the book, just the trend toward decentralization and the way that the internet and decentralized systems are breaking apart and correcting for these large centralized systems that have gotten sclerotic, these big corrupt governments, big corrupt pharma, big corrupt, military industrial complex. All of these things, have become, ways for bad people to extract rent out of the average citizen, which is why the wealth inequality is so bad. I mean, you kind of look at what's wrong in the world today. I lead the book off with that. Then I say America is broken. It really is, because when I was growing up, it was a middle class. And, there kind of still is, but not the way it used to be. Because, 92% of the wealth is held by the top 1%. And that's just, and the way they've been able to do that is that they've tilted the playing field or the game board in their favor monetarily. And it's subtle. The average, working person doesn't know what ZERP means, or doesn't understand what the Fed did to bail these people out. But this is what's created this incredible wealth. And so all of these productivity enhancing things that have happened in the world, better internet, better computers, kind of better everything. A lot of the gain from that hasn't necessarily been transmitted down to the average person. I mean, it is insofar they can use it. I mean, I'm talking to you halfway around the world. That's great. But a lot of the wealth associated with the productivity improvements has gone to the people at the top to figure out how to tilt the game board in their favor.
And we're hinting at the solution, I guess, here through a specific technology in the form of Bitcoin, but we're really talking about sound money. So for those that might not be familiar with the concept, can you just take me through what are we talking about when we're talking about sound money? Or
Yeah, well, and I talk about this in the early part of the book. I mean, sound money. So basically, throughout humankind and all of human history, people have fiddled around with money trying to gain advantage. I mean, humans are flawed, somewhat fallen. I mean, I'm a Christian. We're all fallen. So, and it goes back, and I've got some great quotes in this. Goes back to the Bible, right? I mean, the Lord deemed that thou shalt use honest weights and measures, because people would say, well, an ounce isn't really an ounce, and therefore I'm going to short you on what you bought from me in terms of, whether it be grain or cattle or whatever it might be. And so, there's a long history of people playing with the money, and the people who are able to play with the money and control it have a big advantage. It's called seigniorage, where, and people did this in the Middle Ages. People did it, they've done it for years and years and years. And, generally speaking, fiat currencies have been scams that have allowed the people who issued that currency to extract wealth. And the people who ended up holding that currency saw the value of their wealth decline substantially as it got diluted. And this started back in China in the 13th century. So, but more recently, it became very apparent in the United States. The U.S. was founded, and we had hyperinflation in the Continental, which is the currency they used to pay for the Revolutionary War. And, since that point in time, not a lot has changed. It's only gotten worse, although at least back then, we were on a gold standard. And gold, because it's money that can't be printed, because it's money outside of the system, and because it's relatively scarce and divisible and recognizable, kind of emerged naturally as the soundest form of money that we have. Prior to that, we used tobacco and cattle and all kinds of things, but they got tough. And so coinage got created, but at least the coinage was built on precious metals. Again, something that's limited by their supply in the Earth's crust. They grow every year, and that's actually one of the very powerful things about Bitcoin. I mean, this is the first time ever, and that's not being hyperbolic, ever in the history of humankind, that we've had a form of money that will never grow in supply, which is kind of like, whoa, hang on a second. Because even gold grows at 1.7% a year, the supply of it does. And so in 50 years, the amount of gold on the planet will double. And so Bitcoin really is deflationary money, and its value should go up forever, as Michael Saylor points out, in terms of goods and services, because we're going to get better and better at producing goods and services, yet there'll only be a certain fixed number of Bitcoin. So, the beautiful thing about Bitcoin is it allows the average person to save in the form of a currency that will increase in value, not decrease in value. That's a big difference. It allows you to retire with comfort. It allows you to build wealth without having to take enormous risk. I mean,
hey everyone, pardon the quick interruption here. Investing and growing wealth in between the already and the not yet is incredibly nuanced. If you're in that space, I might be able to help you. I work with everyday investors across the entire spectrum to help develop strategies using all the traditional investment asset classes, as well as provide advice on saving in alternative forms of money like precious metals and Bitcoin. It's not about the tools, though. It's about what you're trying to build. If that's of interest, check out the link in the notes to make a time to reach out to me. Let's get back to the show.
Like a lot of the reason why people, play the lottery or gamble in the stock market or do the things they do is they realize their money is melting, and they've got to try and find ways to make more money to stay ahead, or even to stay even with where they were.
Yeah. It seems kind of unfair, doesn't it? Like, you
It's
think
way
of people that are working their guts out, trying to pay their bills, trying to pay their taxes, to have something left over, which is then robbed through inflation.
Yeah.
So, like, is it even right? Is it just that we should be
No, it's
forced
not
to take
just.
risk?
I mean, I as I say, sound money is a moral issue, and Keynes was an immoral man. I mean, Keynesian economics is an immoral. He said something that I just think is despicable when he said, "In the long run, we're all dead." Well, that's like saying, "I don't care what kind of a world I leave to my kids." I'm just going to eat the seed corn and let somebody else deal with the problems down the road. And that's just not a good, in my opinion, that's not an honorable or an ethical way to behave yourself. I mean, you should try and leave the world better than when you got here. So, and, the founding fathers recognized it. Many presidents recognized it, et cetera, et cetera. And yet we've drifted so far away from it that when Donald Trump tried to appoint Judy Shelton, who's a gold advocate, to the board of the Federal Reserve of Governors, like 73, remember the part of the book where like 73, people came out and, just hammered her as being dangerous.
Yeah.
She actually wanted sound money. I mean, money is a monetary unit that's used to measure activity. And, you can kind of think about it like, it should be like a foot is a foot. And you're trying to build a house and you're measuring in feet, and the definition of a foot's changing. It's going to be hard to make the house work because, one side's going to be a certain number of feet and then the foot changed. And I mean, you got to have money that stays on a relative basis at the same price compared to other things. And, fiat just doesn't do that because the pressures to print and to grow the money supply are just so large that nobody in any kind of political power can resist them. And history shows that, they've always been, abused. I mean, that's what Satoshi said in the white paper. There's a long history of governments abusing the privilege of issuing money. And yeah, it is theft. I mean, it is unfair. I mean, I was on a call with a guy the other day. We were talking about it. I mean, I like to emphasize the fact that in the COVID example in the United States, the M2 grew by 42% in 2 years. So what that meant was, let's say you were a regular working stiff and you're in your 50s and you'd worked hard, and every year you'd save some money and put it away and so forth. And then, maybe by your 50s, you had a couple $100,000 saved up, maybe even $1 million saved up. Government comes along, prints all this money, and prices go up by 40%. All your stuff gets debased. I mean, they just stole 40% of your work effort, when they stole years and years of your life, and what for? I mean, to let them stay in power. And fiat is used for a lot of reasons. I mean, it's kind of a dirty marriage between politicians who are corrupt and they want to, stay in office, so they make fiat promises, and then banks who are corrupt, who realize that if they can get free money and be backstopped by the government, they can take enormous risks that are heads they win, tails we all lose. Because if things go wrong, the government will bail them out like they did and they've done many times. So those two things are what lead to the abuse that the average citizen has suffered, which is to say, life is continually getting more expensive. I know a lot of people kind of feel that, and they can but they can't necessarily put their finger on why. Now, once you're a full-fledged Bitcoiner, you totally understand why. But, frankly, the percentage of this country that are full-fledged Bitcoiners is still pretty small. So, we've got to, in my view, I wrote the book because I want to try to broaden that circle so that there's a lot of people who understand that sound money is important. And as we go forward and things get hairier, we have politicians. We're going to have some more politicians like, Loomis or Thomas Massey or others who are going to run on sound money platforms, Judy Shelton, et cetera. And, we've got a better shot at returning to some kind of a sound money standard, which I actually think ought to be the Bitcoin standard. We ought to leapfrog China. I mean, China's obviously making the bet that gold is going to be the next standard. I mean, they haven't announced it yet, but we've seen the flows into China, and they've imported huge amounts of gold over the past 15 years.
So the big players are positioning for some sort of change, right? But
I think that's right.
Yeah.
No, I think that's right. I mean, certainly you're seeing countries doing it now. I mean, I was at Bitcoin MENA this fall in December, and we learned that Oman and UAE and probably the Saudis are all stacking. Putin has said that, Bitcoin's unstoppable. There's a lot of hash in Russia. We kind of think that Russians may be stacking. It's just a matter of time until everybody starts stacking. They have to. There's some interesting ideas about, how you could use Bitcoin to defease the government debt. I mean, I think they should be doing that. I mean, I think they should be proactively accumulating Bitcoin, knowing that as it increases in price, the debt level will come down on a relative basis.
Do you think that the appointment of Scott Bessent as Treasury Secretary and this talk of a gold valuation, do you think that that's somehow connected to maybe the strategic Bitcoin reserve and an attempt to justify the creation of new currency to buy new Bitcoin?
Yeah, I do.
That?
Yeah, I do. I mean, I think the strategic Bitcoin reserve is a brilliant move. It's obviously just the first step. We need to see them actually buy some Bitcoin. I mean, at least they've admitted they're not going to sell what they've got. But, frankly, that's the red team. I mean, if the blue team gets in, they could change their mind. So I'd like to see it get encoded into law so it's harder to change the mind. And I'd like to see them start, buying Bitcoin. They should be buying Bitcoin. I mean, if they want to maintain their position as, the global reserve currency.
It's probably going to be down to the people, right? Because if more people become aware, that's why this book that you've written, I think, is so good, because it's very, very accessible to someone who doesn't have a background in economics, or if they don't understand sound money, they haven't been introduced to Austrian economics and they maybe come from university or mainstream thinking. A lot of these concepts that Bitcoiners talk about just go straight over their head. But I think,
I hope that's right. I mean, I'm glad you feel that way, because yeah, I worked hard to make it be accessible to everybody. I tested it on a lot of people. Some of them kind of bogged down in chapter 11 and 12. I mean, I go deep into the monetary history because I think it's important. And, the people who are hardcore on this stuff, they want to learn and hear that stuff. But you could skip those chapters and still get the gist. I mean,
yeah,
and the other thing is I point out the corruption. I mean, I've been here, I'm 67, so I've been in this game, for 40 years. And I've seen all the corruption over the years. And I felt like somebody had to write that down and tell that story, because, the mainstream, like I went to a big event down here, and I live in Naples, Florida. I went to an event with a bunch of older guys in Naples, Florida, and started talking about Bernanke. And I mean, they all think Bernanke's a hero. I mean, they think the Federal Reserve, saved the world. And, I have a slightly different view on that. And, but, you need to study and understand what occurred and why it occurred to come to the conclusion that my view is, I think, much more accurate than their view. I mean, their view is what the mainstream media has sold them. And obviously it serves that media, it serves the people in power, it serves the government, everything. I mean, the real reason that Bitcoin's going to really make the world a lot better place, in my opinion, is wars. So one of the things the book points out nice is a chart in the beginning that shows the inflation rate over from 1800 to present. And what you can see is that wars are really the cause of a lot of inflation, because wars are expensive and they're wasteful, right? You're not building or growing anything. You're not increasing productivity. You're killing things, and you're spending a lot of money with which to do it. And, if a government were to come to its populace and say, hey, we're going to have a big war, and you have to give up 75% of their income so we can fight this war, I think the populace would say, what are you talking about? We're not doing that. I don't want to give up 75% of my income. You can't do that. But what happens is that's not how they do it. They say, well, we're going to leave taxes the same. We're going to print a bunch of money to finance the war. And, we're going to take 75% of your savings, and or 40%, whatever the number is. It varies in each case. But, we're going to swipe it from you indirectly through inflation. And so you don't notice it as much. You feel it less. And therefore, that's how they finance these things. They've been doing it since the beginning of time. I mean, World War I, they financed it by, and the Federal Reserve did it. They violated their charter immediately after it had been formed. And they were given the right to borrow money from the government at 3% and reinvest in government bonds at 3.5%. So the banks got 50 basis points for free, and the government got its war financed. So the banks win, the government wins. And guess what? The price level doubled. So, between 19 I don't know 12 or so and 1916, when the war ended, by 1920 the price level had doubled, and led to a lot of stress. I mean, it led to Ponzi and his scheme. It led to all kinds of race riots. It led to a lot of lynchings. It led to a lot of strikes. I mean, inflation is a very, very destructive force on a society. I mean, it pits everybody against each other. Everyone feels like they're getting screwed, and they are. And you say, who are the winners? Well, the winners are the people who know how to benefit from that. The people we call quintillionaires, because they can borrow money cheaply and then put it in things that are going to generate returns above the rate of inflation. And so they end up getting ahead, and they like inflation. But the average working guy, his wages don't go up nearly as fast as inflation goes up. And so he's sitting there at the end of it all, with less purchasing power, and wonders what the hell happened. I mean, in theory, with all the technological developments we've got, all the productivity improvements we've had, we should all be living much better lives. I mean, we live pretty good lives. Certainly in the, upper to middle regions of the income spectrum all around the world. But having said that, it would be even better still if we hadn't wasted all this money on all these stupid things, all these stupid wars.
I think a lot of people agree with you, right? And I think a lot of people that maybe don't understand that it's more about up and down rather than left and right will blame the greedy capitalists, right?
Well, that's right.
But it's
Yeah, no, that in fact that partly triggered my writing the book. I mean, I'm seeing these people saying that the supermarkets are price gouging. No, they're not. The Federal Reserve's printing money. I mean, and people are arguing over the wrong issues, and the people in government and the banks have a very strong incentive to keep the system just as it is. Thank you very much, because they're doing well. And DC is one of the highest income areas in the country. Most politicians go there without a lot of money. They start with a very, very modest salary. They end up wealthy. How does that happen?
Yeah.
So there's a lot of corruption in the whole system, and the American people have kind of been sold down the river by the people in Washington D.C.
Yeah, a lot of it, I think, probably just requires some unlearning of some historical things that people believe and some relearning.
Well, that's the thing, and that's
right.
Yeah, and that's the thing, and that's why I tried to write the book again. I wanted to really explain it. I wanted to get people to think about this in a different way, and I don't think anybody was really thinking about it in those terms. I mean, that's not true, because Lynn and Safe was thinking about those terms, but I'm just saying those weren't books that were broadly aimed at just average Americans.
Yeah.
And so this was, maybe this is Introduction to Sound Money 101, what it is, why it matters, how you can protect yourself. And then once you've read that, then you'll want to go read Safe's book and Lynn's book, because I mean, they're like a whole other level of sophistication, knowledge, etc. I mean, they're much better, but that, if you start off there, I've given them to people and they start off there and they get bogged down.
Oh yeah.
They're like, no, dumb this down for me. What's the Federal Reserve again? I mean, I gave it to somebody and I started, and they started reading. I said, hang on a second, you introduced the Fed. I don't know what that is. I was like, oh, okay. Yeah, I got to explain. So there's a footnote that explains what it is, right?
Yeah, and there's footnotes everywhere for that reason.
Yeah.
Now, changing tack a little bit,
Sure.
probably along the veins of dishonest weights and measurements, I guess you could say, CPI. So a lot of people, the S&P 500 is.
Yeah, didn't you like that section? Right?
Yeah. So can you just explain to me though the what's really happening here? Because a lot of people think the S&P 500 returns have been amazing over the last 50 years, and it's been a surefire way to beat inflation. But what's the real truth behind it?
It's slightly, ever so slightly beat inflation with some very big drawdowns, and every time there's a hiccup. Well, first of all, let's talk about just what is inflation. Inflation, it's what Milton Friedman said. It's growth of the underlying money supply. I mean, there's so many goods and services in an economy, and there's a certain amount of money in an economy. And so, the prices for all these goods and services get set based on the monetary demand for them. And so, just in simple terms, if you suddenly doubled all the money in the economy, all the prices would double, because there'd be twice as much money chasing the same number of goods and services. So, the money inflation is driven by growth of the money supply, full stop. And it can happen a couple ways. It can happen directly. It can happen through fractional reserve lending. But the bottom line is that the government, we've grown the money supply since 71, kind of round numbers, 7% a year. That by the way, that's about what the S&P has grown at during that time frame. A little higher if you reinvest dividends, but not a lot higher. And yet since 71, the government says we've had inflation of 3 or 4% a year. So it's like, hang on a second, that's not true. The government, the Boston Commission came in the early 80s, and they started figuring out ways. They knew that inflation made it tougher for the government to finance itself, and they knew it made people unhappy when they heard about inflation, whether they were facing it or not. They just didn't like the headline numbers. And so they started to create all these rules where they could change the measures, and the book describes it. No point in going into great detail here, but they use things like hedonics and geometric weighting, and basically these were tools designed to gaslight us and make us think the inflation is not as bad as we feel it. And I don't know about you, but I feel a lot of inflation on my car insurance, my home insurance, my food, all of it. It just goes up medical. It goes up every year, much more than the rate they say. And but they managed to cook the books. And John Williams of Shadow Government Stats did some great work on that. He used to work at the government in the BLS computing the inflation numbers. And he followed it when they did all these changes. He's like, holy shit, these guys are cooking the numbers. And he shows what the numbers would be if they're not cooked. Inflation would be much higher. And so, while yes, I mean, stocks certainly help you against inflation. I mean, compared to bonds, which do not, they just don't pay enough interest. At least stocks are somewhat of a hedge on inflation, as is real estate, by the way, as is gold, as is Bitcoin. I mean, the other interesting data point is that, inflation's been running about 7%. Well, gold's been growing at about 8% a year since 71. So gold has actually done its job. It's kind of dull, not particularly exciting. It doesn't pay any dividends, but it does hold its value over long periods of time and grow in value with monetary debasement. So, but yeah, I mean, and then in the inflation world, the thing that really started to change, and I outline this in the book, is, when the government got aggressive about realizing that, hey, inflation, if we can keep the inflation hidden by suppressing the gold price, and yet we can let the money supply grow, we're going to have a booming economy. We'll just lie about the inflation and everybody's going to feel good. I mean, Bill Clinton kind of started this, and then Alan Greenspan got heavily involved in managing the stock market as one of his metrics, so that he created what we all refer to as the Greenspan put, which is every time the stock market would get wobbly, he talked about printing more money. And so, now here we are, years and years later, and we're at a very, very extended place where debt to GDP is a very high number, relative historically, 125%. And, our deficits are large and growing. And in spite of what Doge is trying to do, we're not going to stop that train. One would say we're going to maybe slow it down a little, but not stop it. And so inflation is really, it's set to become the problem of our age, and we're going to have to address it. And as it gets painful enough, we will address it, because people will be screaming bloody murder. And what will happen, I think, is some politicians will emerge who are credible, legitimate, Austrian economists and sound money advocates. And they will say, hey, we need to return to a neutral reserve currency. And the two choices are gold and Bitcoin. Maybe there's a hybrid of those two, but, and we'll go there. And by the way, after that, the world will be a lot better place. I mean, that's, the transition to there may not be pain free, because typically these monetary events create some wide price swings and winners and losers. No way to avoid that. If we wanted to avoid that, we never should have let the bubble form. But, in 2008, they went to 0% interest rates. They kept them there for 7 years. That's nuts. And then they did it again in 2019. And,
You're alluding to this, and this is one of my questions I wanted to ask you is
So-
if we take the truth that sound money is the cure to where we're all heading here, and a return to a sound money system will actually improve things. There's going to be I would assume, a massive disruption between here and there, because
yes, sadly, yes.
the incumbents won't just sit back and take it, will they? So
Probably
what
not.
kind of disruption would you see?
Yeah, well, it could be a lot of different forms. It could be just high inflation until everybody screams and we get a reset. I mean, in a worst case scenario, it could be hyperinflation. If they don't react and print the money, it could be a depression. I mean, they had a similar levered bubble in 1929, and they printed money, but not enough, and not in the right ways. And they actually did a bunch of other things wrong, like the Smoot-Hawley tariffs. And we had an enormous economic downturn that took a decade to recover from. So I think all of those possibilities are realistic. I think most likely, though, because Bernanke has painted the depression as as the boogeyman, and deflation as the boogeyman. I think when push comes to shove, as it did in 2008, when they said if we didn't give them TARP, the ATMs were going to stop working, they will print the money. And so when they print the money, we will have inflation. Now, is it going to be 10% inflation or 20% inflation or runaway hyperinflation? I don't know. It depends on who's in charge. Depends on what they do. I mean, if Team Blue wins and Andrew Yang puts in universal basic income, and Stephanie Kelton is the Treasury Secretary, and we run enormous, right? Yeah, she is Mrs. MNP, and we run enormous deficits. Guess what? We got a chance of hyperinflation. The currency just outright fails. I mean, that's definitely a possibility. I don't think it's a high probability, but it's not zero. So what I like to think of, what I hope occurs, Darcy, is I hope that things get worse. People become aware of the fact that things are getting worse. Politicians, people start to bitch and scream that we need to return to sound money. Politicians emerge would say, you know what? We got to rip this Band-Aid off. We've got this unsound monetary system. It's bad. We got to do a monetary reset. And that's going to have winners and losers. It's going to hurt. But the history shows that when you reset your currency to a sound money standard, things get really better. I mean, they really do quickly. I mean, it was, hyperinflation Weimar Germany culminated in 1923. They went to a sound money standard afterwards, and the country recovered. Now, they're pretty brutal and beat up, and that's why they were susceptible to being charmed by Hitler, who blamed the unsound money on the Jews. But the Ecuador, for example, had hyperinflation. They went to a dollar standard, and everything got better fast. And so, there's a solution to this, but my view is it's better to just rip the Band-Aid off and do the reset, and to let it kind of fester and back and forth and up and down and constant inflation and 2 steps forward, 1 step back. I mean, it's like, let's just take the pain and go back to an honest system. That's what I believe is the right outcome or the right approach to take. Now, it's tricky because politicians won't do anything unless there's a lot of pain, and and they're forced to. So
And there's also, I guess, there is this voice in my head. I can hear it. Probably countless discussions a few years back of people saying, sound money, we would never see that. It would never be a good thing because it would hinder government's ability and central banks' ability to control the economy and manage shocks using fiscal and monetary policy. So,
yeah.
That's what the
Keynesians have brainwashed you into believing. And the fact of the matter is, what they do actually makes it worse. And that we don't need fiscal and monetary policy to manage shocks. We actually need a sound system, and there won't be as many shocks, if any, because people won't get out over their skis. We won't have a serial bubble blowing that's taking place right now.
Yes. Yeah. No, I agree. Okay. Now, Jeff Booth, Price Tomorrow, probably one of the top 10 books, along with yours.
One of the best books out there. Yeah.
Oh yeah, but I can think of, I'm pretty sure somebody's posted about this, but The Bible and Bitcoin, Alan Armstrong, Lynn Saifuddin, yours, Price of Tomorrow, definitely one of them. But with Jeff Booth, he touches on, I think right out of the gate in the second part of the book where you start talking about the solution, you're touching on the same thing that Jeff's book.
Yeah, a lot of that came from Jeff's thinking. I mean, we're trying to run an expansive, growth-oriented, deficit-oriented monetary system on top of a deflationary world. And that's just a fundamental conflict. And when you read the second half of the book, you'll see there's a lot of Jeff in there where I just talk about how deflation, we have to kill the Keynesian notion that we need inflation for the economy to function. Right. I mean, that's wrong. The economy functioning perfectly well from 1789 to, well into the 1920s, when we kind of first abandoned the gold standard. There were 2 large periods of deflation, and the living standards in this country went up enormously during those deflationary periods, and we had real growth. And that's the other thing. What we're focusing on is growth, and really in a resource-limited planet, growth isn't the thing to focus on because, taken to infinity, take to the end point, there's a fixed number of resources, right? So the issue really is for human well-being is efficiency. How do we get more output for less input? And that's productivity. And so the way you get productivity is you have the price of capital be set correctly. The price of capital is the interest rate. And what we've got a system where it's like the Politburo is setting the price of grain. They're going to have too much or too little grain because they don't know what the market says. So the price of capital, the interest rate should be set at the point at which savings and investment, demand for investment opportunities balances with savings at some price. That's the interest rate. That's what it should be. And the market will tell us what it is. And so if people save a lot more and there's excess savings, well then, and then interest rates will come down because there's a lot of supply of money. And, but if people have, a ton of good projects, then, and they demand a lot of money, well, then interest rates will go up and those projects will face a higher hurdle rate that they need to clear in order for somebody to be willing to make the investment in that new project. And so it's a different model. It's a different way of thinking. It's so funny that this is supposed to be the land of the free market, the land of, let the market do its thing, right? I mean, there are a lot of people, even Keynesians, who would say, let the market do its thing. Okay, fine. So why don't you apply that to the cost of money? Because there's a demand for money and there's a supply of money. Why don't we just let them balance, right? And then why don't we let the market tell us what the interest rate should be? That's what should happen, in my opinion.
Yeah.
But instead, we've got these, 12 people sitting at a big table on Constitution Avenue in Washington, D.C. And, and they're extreme, right? I mean, at the high end, they've set the price of money as high as 20%, which is crazy. And at the low end, they've set the price of money down as low as 0%, which is also crazy, And so there's a happy medium, and the market will find it, and it'll go up and down, based on trends and other things, but it won't be so incredibly zigzag out of control. It'll be much fairer, because the people who have control of that price, they game it. They know when it's going one way, they know what's going to happen next, and so they can game it. And the average person doesn't know how to do that.
Why are Keynesians then so petrified of deflation? Like, is it a misunderstanding of like deflation is the natural outcome of technology, or is it because deflation is a symptom of failure, like maybe the economy is failing?
I think what they've done is they've gotten in bed with the devil, which is the government. And so, I mean, Keynesian economists and Keynesians and monetary policy makers wouldn't really be necessary in a sound money system. It would just kind of run itself. But if you suddenly convince the world that you're necessary, i.e. that you can do a better job by pushing rates up and bringing them down and backstopping the banks and doing all the things they theoretically say they do, which they do, but they mess it up. You have prestige, right? I mean, Alan Greenspan, I said this in the book, and later in the book you'll read it. Yeah, he was at some luncheon with somebody I know, and he said something along the lines of, "Yeah, being in control of this money. I mean, it's a very powerful thing. It's a really heady experience, right?" And so, the government people like it because they get all their projects paid for, and they get rich in the process because they know how the thing's operating. And the economists like it because it makes them seem important and powerful, and they get to write books and give speeches and proselytize on how it all works. And so it's kind of an intellectual protection racket too. Later in the book, I mean, the Federal Reserve spends millions and millions of dollars every year paying people at Keynesian monetary institutes and journals and universities to support the system as it now exists. And so if you're an Austrian economist and you believe in the business cycle theory the way we do, your chances of getting tenure or getting money or getting support for studying the Austrian economic world are not very high, because that doesn't support, the government and the system that allows all the insiders to do so well.
Yeah.
And so they've used our money to squelch dissent. And this topic is sophisticated. They dress it all up. I mean, they wear nice suits and they talk about how they say the right words. We're doing this for the American people and we're trying to fulfill our dual mandate. And they have all this nice stuff, but the fact of the matter is, at the end of the day, if you really examine the history of the facts, the big wide swings in the economy as a result of what they've done, you come to the conclusion that, even things they say, I mean, you'll get more. Janet Yellen is saying stuff like, I mean, they say inflation is transitory. They knew it wasn't transitory. They're just lying to us. They can kind of, they make up their own narrative to support their own system. And, the book is an effort to call them on their narrative and say, you guys are lying. You're full of shit. This is not the way it's supposed to be. And by the way, us Bitcoiners, we're gonna take all that shit away from you.
Yeah. I love that. And I think that there's something in it in terms of the mechanism behind the green curtain that a lot of people are unaware.
Oh yeah.
Partly because, like you say, it's a little bit technical. It's a little bit nuanced to understand this space, but
it's a little bit scary. It's a little bit scary. I mean, it's and people like to be comforted, and these people are really good at saying comforting words. That we stand ready to solve all the problems, blah 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 blah.
Yes,
but they've built a system that's broken.
Yeah,
and that's becoming more and more evident with every swing back and forth. In the 2008 example, they printed, a couple $1 trillion in, over 3 years. Now they just printed $5 trillion in 18 months in COVID. So, it's getting more and more out of control.
And
the inflation is getting worse.
It's safe and effective, right? Yeah. So it's that whole.
That's what they say. Yeah.
Yeah. Okay. So when it comes to the United States, right? So I'm sitting here asking this question as a Canadian in New Zealand. So I feel kind of like somewhat qualified, but someone not qualified to ask this question and just kind of ponder how things will work here. But if the U.S. is the dominant currency in the world, it's the world's reserve currency, and there is some sort of move or change towards a sound money system, in my mind anyway, the way I've kind of gone through the gymnastics is I don't see any way that it could happen without the United States going first. Can you critique that, or is there a world where it's kind of forced upon the United States where they have to respond? Do you think that they'll go first?
That's a great question. I mean, it gets into a little bit of game theory. I mean, I think, China's got a lot of gold. China could try and do it, but China doesn't have the rule of law that we have.
Hey, pardon the quick interruption here. If you are investing and growing wealth in between the already and the not yet, then I am here to help. I work with everyday investors across the entire spectrum to help develop strategies using all the traditional investment asset classes, as well as provide advice on saving in alternative forms of money like precious metals and Bitcoin. It's not about the tools, though. It's about what you're trying to build. If that's of interest, check out the link in the notes to make a time to reach out to me. Let's get back to the show.
Rather than think about which country will go first and which will bring back the gold standard or bring back a sound money system, first of all, one of the things you said, the U.S., the world's reserve currency, that's true. And it used to be 100% of all the oil trades. It's down to 65% and falling fast. I think more likely what's going to happen is it's just going to get used less and less. I mean, the United States is a very good payment rail. Everyone accepts dollars. Everyone knows what a dollar is. It's the best way to move money around in dollar terms. But frankly, that's what stable coins are doing, right? What I think is going to happen is the underlying soundness of the dollar, or unsoundness, I should say, is going to become more and more apparent. And there's going to be literally nobody who wants to own or hold debt in dollar terms. Everyone's going to migrate to something else. And the two possible something else's are Bitcoin and gold. And so yeah, maybe you'll hold your money in Bitcoin. Maybe you'll transfer it into dollars to make a payment where they don't accept Bitcoin. But literally every $3 you have, you will put into these other currencies, which are not getting debased as the debasement gets worse and worse. And I think mathematically, the debasement has to get worse and worse. It's built into the system.
Okay. I just want to get you to comment on this quote. It was in your book. I love this quote by Frederick Hayek. Frederick Hayek?
Oh yeah, Hayek, yeah.
Hayek, yeah. So I don't believe we shall ever have a good money again before we take the thing out of the hands of government. That is, we can't take them violently out of the hands of government. All we can do is, by some sly roundabout way, introduce something that they cannot stop.
Yeah.
So what is that?
It's almost like you could foresee Bitcoin, isn't it?
Yeah. Like, when did you say this? This was like...
Yeah, a long time ago, in the 80s. So Hayek was really brilliant, and one of his most brilliant insights was that they had figured out a way to manufacture and control the gold price, and that because gold, once we moved to full ledgers, it became much easier for them to say, well, we've got the gold, even if they didn't, and they started creating fractional reserve gold, and as long as they can control the accounting and the ledger. And they could say they have the gold even if they didn't. And so even though we were technically on a gold standard, we really weren't. I mean, that all started to fall apart right after Bretton Woods. It got worse and worse as time went by. And I think what Hayek realized is that most government players are just so self-interested and do so well in that system that there's no way in hell they're ever going to challenge it. They like it just perfectly fine. And that's why I honestly feel like... I kind of feel like Bitcoin is almost like God-given. It's like God looked down on the world and said, you guys are really screwed up. I'm going to give you this tool that's going to allow you to break this knot.
Yeah.
These guys have got you in. And
knot. Yeah.
The Gordian knot. Yeah. And so now people can, basically opt out of that system. You don't have to own fiat. You can save in Bitcoin. And guess what? As it becomes more and more obvious that's the best way to save, more and more people are going to do it. Eventually, there's going to be almost no demand for fiat, or to the extent there's a demand for fiat, it'll be literally to make a transfer into fiat, take that transfer, and then buy something. And then the person you bought it from, they're going to get the fiat, and it's going to be a hot potato. They're going to go buy something else, and we'll transfer it right back into Bitcoin or gold. So, because everyone knows that fiat is losing value every single day. I mean,
Gresham's law.
in the Weimar example, in the last year of Weimar, I mean, they were marking up prices by the hour so that you might go out to dinner and, they'd say the price was going to be X. And by the time you finished, it was Y, it was more.
Yeah.
That's kind of a extreme hyperinflation scenario, but it's not entirely off the table. They print money to excess. Eventually the money will become worthless. We know that.
Yeah.
So
I like, the fact that you made that comment that Bitcoin is it's almost like something that's God-given, because if you think about what would create positive change, it wouldn't be a focus on the failure. It wouldn't be trying to fix and make the failure deeper. It would be a focus on something that's good, like the correct behavior, more so than the bad behavior, right? And
that's
I think that's
right.
kind of what sound money does, right? It gives us some standard to measure everything by.
It incentivizes savings.
Yeah.
It rewards people with a long time preference.
Yeah.
It roots out a lot of the corruption.
Yeah.
It makes it harder for governments to sponsor wars. I mean, there's so many benefits to sound money. And you can see this. I mean, say it calls it the Belle Epoch, which is kind of like the 1870 to 1900 period, where we're on a classical gold standard. Very small number of wars, incredible architecture got built, art and so forth, and really living standards improved enormously in that time frame. And then, of course, the century of central banking started in 1913, and we got into a war, and we kind of went in the wrong direction quickly.
Yeah. So on that, and we'll finish up on this one. A quote by Ron Paul.
Yeah.
No coincidence that the century of total war coincided with the century of central banking.
Ron is very smart about that, and that's true.
It is. So tell me about that. Like, and I read a news headline just this morning about the U.S. trying to get some allies together. I'm not sure where they're going to come from to go after the Houthis now. Where do you think this goes? Like, do you think that governments will just keep on manufacturing these crises, these events, which justify the creation of new credit to be borrowed into existence, which ultimately inflates the currency? At some stage, it's going to come to a head, right? And do you think that people are starting to wake up, or is it just us because we're stuck into like our echo chambers? But do you think the world is starting to wake up?
I think the world's starting to wake up, and I think the problem is that every intervention has to be larger and more intense. And so the next Fed balance sheet, the Fed balance sheet went from 900 billion in 2007 to, it climbed up to almost 3 or 4 in the low fours, 3 or 4 years later. And then, of course, it came back down a touch, and then it went up to 9, and now it's back down to 7. And, I think the next big print, in my view, will take us to 20, 30 or 40. And the whole price level of everything will go up. And that's just math. It's just kind of built into the system. And, we can't really stop it unless we decide to return to a sound money standard.
Yes. No, I agree. If anybody just needs another reason why, read it, right? It doesn't matter if it says it's what happened to America. This is actually...
It's really the world, but I wrote it from an American perspective, and just because we're the leading currency. But it's applicable to the world, and I think if you do take the time to read it, my sense is that you might find, hey, if you're a Bitcoiner, you'll find, hey, this is the kind of book I could give to somebody who's not a Bitcoiner, and it really, like I say, I really try and dig deep and show what the problem is up front, show all the corruption, show how misguided what we've done has been, and that'll piss you off, and maybe upset you, knowing that kind of we've got some problems, rough years coming up here. But the flip of it is, on the other side of it, we've got this fabulous technology that's really going to make things so much better. It's already started to do it for Bitcoiners. I think Bitcoiners are some of the happiest people I know, because we know that our wealth isn't getting taken away from us. And that's a really nice feeling to know there is a solution.
You're
part of the solution. Yeah, we're living in the solution. Now, admittedly, it's not broadly spread across the world, but you can personally, become, take yourself out of their system, put your savings in something will increase in value, and the worse their system gets, the better off you'll be. And my suspicion is their system's going to get pretty bad. To me, it's a very hopeful thing. And then, to the degree, there's a lot of reasons to be into Bitcoin. Eliminating the wars, helping the third world, Number go up. I mean, but it's over time. Actually, number go up isn't as big a one for me anymore because I've got what I need. I'm not going to change my lifestyle very much, and it's more about I want to see things get fair again. The other thing that's we haven't really talked about much is what's so wonderful about the Bitcoin network is it's totally fair. Nobody has an advantage. Everyone plays by the same rules. If you're a miner, you've got to produce blocks. If you're a buyer of the coins, you're on the same footing as every other buyer, whether they're a billionaire or 100 millionaire. It doesn't really matter. You're all in the same boat, playing by the exact same rules. And there are no bailouts for them. There's no special favors for them. They don't have a lower interest rate than you. Nothing. You're all in the same rules. That's a big. I mean, that doesn't sound like much, but it actually is a lot. That's a really big deal because the system we have now, it's not at all. I mean, we're all playing under completely different rules. If you're rich, you're protected. If you're working for a salary, you're getting screwed.
And I think it comes out like even what I do in terms of reaching out to people on the podcast, like one of the cool things, based on your profile, you actually agreed to catch up with me, which is pretty cool, right? And a lot of other people have as well. But I noticed a very sharp correlation between the people in the Bitcoin community that are willing to talk to me versus the people in traditional finance that are willing to talk to me. And I think that says a lot about the internal motivations going on with those who know they are sitting on the solution. They have ultimate faith of where the world is going, and they know they're on the right side of history over a long enough time frame.
Right.
And it creates a certain amount of, I guess, security in itself, which I think is quite noticeable coming from the outside, coming in, like I have, and a lot of other people when they're looking in. There's something a little bit different about how these people talk about problems, and that they're also kind of smiling, like they kind of know what the solution is.
Oh yeah,
which is pretty cool.
Yeah, no, I mean, I've gotten very, very peaceful as this thing has unfolded. I mean, and by the way, I wasn't always this way. I mean, it's there've been some big ups and downs, and but now, I mean, a couple of things happened in the last year that I think are really pretty notable that we should mark and just observe. I mean, because before this last year, when I would talk about Bitcoin to people, some people were worried about the technology, and I could help them get through that. But the biggest concern I seemed to encounter was people were worried, well, the government's, yeah, I get it, it's a nice idea, but the government's all going to kill that. Well, when the ETF got approved in January, February, that was an enormous step. I mean, really, really, really enormous. And so that's allowed, everyday people to put some of their savings and their retirement in it. And it says that the government is recognized as a commodity, and, they're not going to take it away from you, at least not now. I mean, maybe Team Blue would, but the second thing that happened is just enormous, the strategic Bitcoin reserve, for the government to admit that this is a form of money that they think is strategically important vis-a-vis other countries. Well, now you're talking about nation states, Tomo. So, when they did that, that just sent a message to Russia, China, every other, nation out there. Hang on a second. Is it possible that this will be the reset, that we'll reset to this and not gold? Oh, well, if that's the case, maybe we need to own some of this. And by the way, there's a fixed supply of it. I mean, it's to me, it's still amazing we're not at higher numbers. I mean, what is it? 21 million coins. Some of them are lost. Satoshi's got 1 million, whatever. 42 million. I mean, every millionaire in the world can't have one Bitcoin. So if you've got one Bitcoin, kind of by definition, you're a millionaire. I mean, it may only say $80,000 today, but you're a millionaire, as we reset.
Yeah. Oh, that's cool. That's encouraging, right? Awesome. Now, Lawrence, if people want to follow what you put out there, I know you're
Excuse me.
That's right.
Yeah. Well, a couple things. I mean, one, this, obviously, hawking the book. Books on Amazon. It's ebook, hard copy, paperback. Audio is out very soon. Like I think within a couple of weeks. We're finishing up the recording of it right now.
Awesome.
I'm on Twitter under my name, Lawrence Lepard. And then I go to the shows, and I'm happy to sign books at the shows. Anybody who's there, just come say hello, and I'll do it. And this year I'm going to BitBlock Room in Dallas. I'm going to the Las Vegas Bitcoin Conference. I'm going to Cheat Code up in England in April. And I'm going to the Bitcoin Prague Conference in Europe. So, so it's not the end. And I'm on Twitter. I try and answer DMs. I can't answer absolutely everything, but I try and be responsive to people and help people out if they have questions. So, And what I would just say is if people, get bitten by and go down the rabbit hole, I think the most important thing we can all do is just kind of keep spreading the word. I mean, once you found the solution that you realize is going to make people's lives better in the future, well, then the natural, in my case anyway, the natural next thing is, you want to tell your friends and your relatives and people you care about it. And I've been doing that. And then I thought to myself, well, it would be great if I could just maybe expand that to the whole world.
Yeah, why not?
So, and whether the whole world's going to listen or not, I mean, that's a debate. I mean, I get it, right? Maybe people can say, "Oh, this book sucks. I don't want to read it." But I figured I might as well take a crack at it, right? So this book was my best effort at orange pilling the entire world. A modest goal.
Yeah, you've hit it out of the park in my.
Well, I don't know what that. It's the best I could do, and there'll be other good books. There've been great books written already, and there'll be other great ones written as well. But
yeah,
one of the things Jeff I Booth talked about, and I talked to him quite regularly. He said, and I love this statement. He said, when you're a Bitcoiner, every other Bitcoiner is working for you. I mean, it's kind of like, Micah Saylor is working for me, and Seyfedin is working for me, and Lynn is working for me, and you're working for. I mean, we're all working for each other, right? Because we know that this system is going to make the world better. And so, we each just do what we can. I mean, I'm not very good at doing podcasts, but you are. So you're doing great podcasts. And so, here I am, I wrote a book, and, so we all kind of do our part to try to, bend the curve. I mean, I think it's almost certain that this thing's going to win, and we're going to be, my grandkids will be on a full Bitcoin standard. I have a very high probability of that occurring, but, because time is limited and because we'll be here in 50 years. Now I want to see it happen sooner rather than later, right? So, I'm trying to bend the curve and make it happen faster. So that's therefore the book, right?
Yeah, I like it. Awesome, Lawrence. Thank you very much. Really appreciate.
Oh, thank you. Really enjoyed talking to you. And anytime you want to do it again, we'll put together.
Definitely take.
Are you going to Las Vegas this year?
Well, that was the one place where I was thinking I'd probably go. It's probably the closest for me to get there. And
yeah, you should. It's a really great thing, and there are a lot of events and stuff. Make sure if you go, tell me about it. I'll tell you about some stuff's going on.
Fantastic. Awesome. Thank you very much, Lawrence. Appreciate your time today.
Thank you. Enjoyed talking to you.
Likewise. See you later.